How's it going, everyone? This is Nick from Reventure Consulting, and I am super excited to be back here today with yet another market deep dive. These market deep dives are a recurring series where we dive into a new city and market across the country every week, looking at what the real-time data on the economy and real estate market is saying. And I'm really excited today because we're going to be talking about Seattle. The Seattle, Washington market. And this is one that you guys have been asking a lot of questions on recently. And Seattle is a super interesting market because it's a bit of a tale of two cities here. On one hand, you have a really thriving economy, a thriving tech economy. Obviously, Amazon and Microsoft have their headquarters in the metro. You also have companies like Starbucks and Costco, which are in the metro. So there's lots of really good Fortune 500 companies propelling Seattle forward. And of course, that is great for the local real estate market. That is lots of jobs, that's lots of income growth and wage increases, and that's a good thing. If you're a home buyer or an apartment investor, you want those things in the market you're looking for. But on the other hand, Seattle has some headwinds, particularly related to how expensive the city is now getting. The typical price of a home is over $600,000 now across the metro, and some are wondering, is that simply too high? How long can this go on for? And is Seattle in a bubble that's about to crash? Well, I'm going to answer that question in this video by looking at what the deep real-time data is saying. I'm also going to take a more detailed look and look at which neighborhoods within Seattle are the most affordable and the most expensive, as well as which are the ones with the most appreciation. Because I know you home buyers and investors out there, you care about appreciation. So without further ado, let's get into it. And as I said, we can't start talking about Seattle's real estate market without talking about prices, right? And Seattle has gone from 20 years ago being, a slightly expensive market to being an extremely expensive market here in 2021. The typical price of a home across the metro area is over $600,000. That's the fourth highest in the continental U.S., right after Los Angeles. So Seattle's home prices are now getting to that California level, and I think a lot of people are feeling priced out of the market. If you're a first-time home buyer, even if you have a good job, it's pretty hard right now to buy in Seattle. And if you're an investor, you're also feeling the squeeze because your yields are low due to the really high prices. And so you can see what I'm talking about here on this graph where we're comparing the typical home price in Seattle, which is the blue line, to the typical price in the US as a whole, which is the gray line. And this is data, as always, it comes from Zillow. It's their typical price of a home across the market. And what's immediately evident is the tremendous growth and appreciation that Seattle has had over the last 7 to 8 years, all the way up to a typical home price of $616,000 in March 2021. Compare that to the US average of $277,000. So there's a difference of about $350,000, right, between the US average and the typical price in Seattle. But it wasn't always this way. If we go back, to the mid-90s, we can see that Seattle's typical price in '98 was $190,000 and the US was $115,000. So the difference was a mere $75,000 back in 1998. Today, the difference is $350,000. So a lot of people are asking the question, even though Seattle has really great growth and economy, is that difference justified? So I put a lot of time into these videos. I love sharing this content with you guys. If you're enjoying this data, all I ask that you do is just please hit the like button. Hitting the like button tells YouTube that it's a good video and it will show it to more people. Please also comment on the video. I want to hear what you have to say, especially if you're from the Seattle area. I love getting local insights, so please don't hesitate to comment. And also make sure to subscribe if you haven't done that yet. We come out with a new market deep dive covering a new city every single week. It could be your city next week, so please subscribe to make sure that you don't miss that. All right, back to the video. And I think one thing we need to look at is Seattle's real estate price history. You can see on this graph that it's a bit turbulent. Prices in Seattle increased kind of moderately throughout the early 2000s before really pumping up in the mid-2000s, right? From about 03 to 05, prices went from 270 to 410,000, and then they proceeded to collapse all the way back down to about 260,000 in April 2012. So the central question on a lot of people's minds is, Are we going to see a similar downturn, a similar crash in Seattle's home prices going forward? And this is a really important question, and it's a loaded question because I know people have a lot of opinions out there on why a market like Seattle will be so expensive. Of course, like we said, all the tech jobs, all the tech growth, that is certainly driving values higher in a legitimate way. The other thing is that Seattle is kind of especially the mainland, Seattle is kind of landlocked. There's not a ton of new land to build homes and apartments, so it's a bit supply constrained. So for those reasons, we definitely should expect that a lot of this appreciation is justified. However, the one metric I always like to come back to test whether a market is overvalued or not is value to earnings ratio. And what that metric is we take the typical home price in a market and we divide it by the average earnings of the average worker. And the idea here is that we're comparing wages and income to home prices because in effect, it's wages and income which will determine home prices in a market. I mean, just think about how someone goes about buying a home. They go to a bank. What's the first thing the bank asks? Income verification. What's your job? And they will base that loan amount that they give you on your income and job, right? So that directly impacts home values. Also, higher wages and income allow people to afford higher down payments, which also increases values. So looking at the ratio of home prices to income and wages in an economy will help clue us in to whether Seattle's in a bubble right now or whether it's fairly priced. And so on this graph, we're looking at the value to earnings ratio in Seattle over the last 15 years or so. And again, this is the typical home price across the market, which as we just established is $616,000. And we're dividing that by the average earnings of the average worker, which are $66,000, according to data from the Bureau of Labor Statistics in March 2021. So that ratio of $616,000 to $66,000 is a value to earnings of 9.3x. So the typical price of a home is over 9 times what the average earnings are for the average worker in Seattle. And you can see that this figure has just exploded over the last couple of years. I mean, it was in the mid 7s right before COVID, and then since then it's gone all the way up to 9.3. And so this is definitely a little concerning, especially in regards to what Seattle was looking like in 2007 before the last crash. We can see that Seattle was around the 8.3 to 8.4 value to earnings marker. And then we all know what happened next. There was a crash in values, and that brought value to earnings all the way down to 4.6. So not only is 9.3 today the highest level it's ever been in Seattle, it's above the levels that Seattle was at before the last housing crash. That's not a good thing. It's also it's more than 2 times the level that Seattle was at in 2012. And this is where people need to start thinking about markets not as just a good market to buy in at all points in time, but to understand that real estate is cyclical. If you were to buy in Seattle back in 2012, 2013, you are getting great value based off these metrics. If you buy in Seattle today, you are not getting good value based off these metrics. You're paying a really high price for what people in the local economy can afford. So I would not be surprised if that value to earnings ratio, which is at 9.3 today, regresses back into the low to mid 7s range that it was in 2017, 2018. That's still well above what the U.S. average is, but it would necessitate a correction in Seattle's housing market, probably by around 15 to 20% in values to get down there. So I think Seattle definitely has some downside in the market. Again, that doesn't mean you shouldn't buy there, especially if you live there and want to live there. You're going to look in Seattle, but it's just something to note is that prices in Seattle now are very high relative to wages historically. Now, I think there's also one more headwind that we need to talk about with Seattle, and that's its political climate. And this is something I'm increasingly focusing on in terms of market selection because we're seeing, especially over the last year to 18 months, that there's very different policies being enacted by state and by city across the country in terms of economic growth and especially in terms of favorability to real estate owners and developers. And the problem with Seattle, and particularly King County, which is the principal county in the Seattle metro, is that it's becoming so liberal. Like, it's not just a little liberal like it was 20 years ago. It's becoming ridiculously liberal. And to be honest, when they become one-sided politically in any direction, whether it's liberal or conservative, it's typically not good. A one-sided political climate typically results in negative outcomes for the growth prospects of a state or city, and that's something we're going to take a look at right now. So what you can see on this graph is what I'm calling the Democrat voting margin in the last 6 presidential elections in the 3 main counties in the Seattle metro area. So we have King County, which is where most of Seattle is. Then we have Snohomish to the north, which is where Everett is. And then Pierce to the south, which is where Tacoma is. And what really jumps off the page at you is the direction of King County. In 2020 presidential election, King County voted 76% for Biden, 22% for Trump. That was a plus 53% margin of victory for Biden, the Democratic candidate. If we go back to like 2000, King County was liberal, but it was much more reasonably liberal. It was plus 25% for the Democratic candidate. So still very liberal, but not this plus 53, which is essentially a climate and environment where it's a one-party rule when you think about the mayor, the city council, and especially because the state in general is liberal. Now, this is less of an issue in the surrounding counties. Snohomish County is moderately liberal, has stayed kind of at that same plus 15 to 20% range. Pierce, also moderately liberal, has stayed around that plus 10% liberal range over the last 4 to 5 elections. So less concern in Pierce and Snohomish County in terms of political direction, but big concern in King County. And why am I talking about this specifically? Well, when areas get ridiculously liberal, think San Francisco, right? Think Manhattan, they tend to start enacting stupid policies. Right? And in Seattle, the biggest example of this was last summer in June. The city of Seattle basically turned over a 5-block by 5-block radius in the Capitol Hill area to anarchist protesters. And there was no police presence in that neighborhood for almost a month. Business owners, people who lived there, you couldn't call the cops if you lived in that area. It was an anarchist autonomous zone. And the city of Seattle allowed this to happen for nearly a month. Right? Think about the message that sends to people in the city who care about property values, income, jobs, right? They're not going to want a piece of that. So that's a very negative growth policy that Seattle enacted there, and certainly gives concern about what they're going to do in the future. The other thing to think about in regards to how liberal Seattle and King County are is treatment of real estate and landlords and tenants. Basically, Seattle has become an extremely pro-tenant city. Look, being pro-tenant, that's not bad in general, but if you're a landlord, it's super hard to evict, even if tenants aren't paying rent. It's super hard to get late fees. You might have a tenant living in your unit for months and months not paying before you can get them out. That's not a good situation if you're a real estate investor. So, Seattle's really liberal tendencies hurt you on 2 fronts as a real estate owner. It's probably going to hurt growth in the metro going forward, and it hurts you directly as a real estate owner given your rights. Now, I hope I wasn't too harsh on Seattle. I still think it's a good market from an economic standpoint. It's just when you combine the high prices with the deteriorating political climate, that doesn't make you feel good about investing in the city. Of course, I know some of you live in Seattle. I know some of you are going to invest there no matter what. So it's important to understand, especially given the headwinds, it's even more important to understand the specific neighborhoods and submarkets, right? What are the neighborhoods and zip codes that are most expensive and most affordable? Where can I get the best value for my investment? Additionally, it's also important to understand where the appreciation is. What are the areas that are growing the most? What are the areas that are growing the least? It's really important as an investor, if you're in Seattle, a home buyer, real estate investor, it's really important to understand these things. What we're looking at on this map is every zip code in the Seattle metro area, and you can see the metro area is really big, spans a really large area north to south. And north is, like I said, Snohomish County, here is King County, and then here is Pierce County. And the color coding shows how expensive home prices are. So the more purple and magenta looking the zip code is, the more expensive home prices. The more translucent or blue the zip code looks, the lower the home prices. And we can see that as the metro as a whole is expensive, there's big variations within the metro area. And if we zoom in, we can see kind of the center of Seattle, and then especially Bellevue to the east, Bellevue is where Microsoft is. That's where really high prices are. So we actually have a zip code here, 98039, Medina, King County. Typical price of a home is $3.3 million. That's some Beverly Hills level prices right there. Then we have 98004 in Bellevue. The typical price of a home is $1.9 million. 98005 in Bellevue, typical price is 1.3. If we head over the river back to Seattle, we can see expensive prices in 98112. Typical price of a home there is 1.4 million. And then kind of more in the center here, more like downtown Seattle, more densely populated area, the typical price is around 650. Now you're not going to be getting a home in 98104 for 650. You're going to be getting a condo for 650 most likely. So that's something to think about. Now, if we zoom out, we see that the affordability, the more bluer areas, are especially concentrated to the south. We have Tacoma here, and typical prices here range from $370,000 to $470,000. Now, $370,000 to $470,000, these would be high prices for most markets, but because it's in the Seattle metro, it's actually relatively cheap. But if you looked at a typical price of $460,000 or $490,000 in a market like Dallas, that would be very expensive. But in a market like Seattle, Tacoma, it's fairly cheap. And then we also have a little bit more affordability north if we head up to Everett, which is in Snohomish County, zip code like 98201. Typical price is $441,000. So it's really important to understand these differences at the micro neighborhood level, right? Like you need to understand what your max budget is from day one. You need to really understand what you can afford. And then you can use that budget to triangulate the zip codes and neighborhoods that are going to most fit what you're looking for. If you are fairly wealthy and you're looking to buy a home and you want to be in a really nice neighborhood, you're going to target those areas in Bellevue, right, where home prices are over $1 million. If you're on more of a shoestring budget and you don't mind commuting, you're going to go to a place like Tacoma or Everett. If you're a real estate investor, right, and you want more yield, you're also probably going to look more towards a place like Tacoma or Everett, because it's going to be really hard in mainland Seattle to buy a rental property and turn cash flow right away. Maybe if you buy a bigger multifamily property, you could, but if you just buy a house, right, or you buy a condo, it's going to be very difficult for you to actually make any money in terms of cash flow, from the rental income after you deduct taxes, HOA fees, and mortgage interest. So you really need to understand what your budget is and what you're looking for, and then triangulate your search based off that. Now, the other thing that you also probably care about is appreciation. Trying to understand what are the trends in the market, where are people going, where are prices growing the most, where are prices growing the least, and that's something we're going to look at right now. So on this map, we're looking at all the zip codes in Seattle again, but now instead of looking at the typical price, we're looking at the typical price growth over the last year. The typical appreciation that we've seen in these zip codes over the last year, where the magenta coloring is higher appreciation, the more blue or translucent coloring is lower appreciation. And we actually see almost the exact opposite color coding than we saw in the graph before. Whereas the graph before had the most expensive areas in Seattle core and Bellevue, these are actually the areas that have done the worst in the last year in terms of appreciation. You can see that a lot of people, given all these, plus 20%, plus 19% appreciation rates, you can see a lot of people are flocking to areas like Tacoma, and then Everett, and then even kind of going further out east into the more rural mountainous areas. Those are where people are flocking to over the last year. Probably something to do with the work from home component that we're seeing now across the economy, as well as COVID pushed a lot of people to want to get out of cities. And if we zoom in, we can see this shown in more detail. So actually the worst performing areas of Seattle are this kind of urban core area. 98121, 98101, 98104, 98102. These areas have done basically they're flat year over year, which is pretty bad considering that the typical home price across the U.S. has gone up by about 12% year over year. So if you're flat, you're losing out. And just for curiosity's sake, 98102 into 98122, this was the area where Seattle had the autonomous zone. So I wouldn't be surprised if that type of social unrest is affecting some of the values in the more urban areas of Seattle. Seattle's a market I like in the long run, right? The presence of Amazon, Microsoft, Starbucks, Costco, all these really big, strong, growing Fortune 500 companies are going to mean Seattle is going to keep growing from an economic standpoint across the metro area. I don't doubt that. But in the short term, the market seems pretty overvalued. When you look at the relationship of values to wages in the local economy, it says that the market's overvalued. That ratio is higher now than it was before the 2007 housing crash. So that should be something to consider. Additionally, Seattle's political climate is starting to make it worrisome as a real estate owner, both from the prospect of maybe declining growth towards the urban center, as well as declining rights as a landlord. So those are some things to think about. If you're looking for more affordability in potentially high growth areas, Tacoma and Everett are definitely doing better than the more urban core of Seattle. However, don't be surprised if in the long run, right, in the next 5 years, the urban core maybe starts growing a little faster again. So I hope you guys enjoyed this video. This is what I do for a living. I'm the CEO of a company called Reventure Consulting, and I use deep data like I did in this video to help real estate investors and home buyers make more educated decisions about the markets and neighborhoods that are going to return them the most money into the future. If you want to learn more about how I can help you with that, please go to my website, www.reventureconsulting.com. That's www.reventureconsulting.com. Leave a contact form. And make sure to also leave a description in that contact form about what you are doing in real estate, and I will get back to you. Until next time, this is Nick from Reventure Consulting signing off.